Trump's potential executive order, expanding 401k access to private markets. Imagine a game changer in the world of retirement savings, where your 401k could potentially grow even bigger through investments in private markets. President Donald Trump is reportedly gearing up to sign an executive order that would open the door to these opportunities. But here's where it gets controversial. This move could dramatically alter how millions of Americans save for their golden years. According to the Wall Street Journal, citing insiders close to the situation, the upcoming executive order would instruct both the Labor Department and the Securities and Exchange Commission to draft guidelines. These guidelines would help employers and plan administrators integrate private assets into 401k retirement plans. It's worth noting that the specifics of the order are still under review and haven't been finalized just yet. Now, what exactly are private market investments? Think of them as private equity, venture capital, real estate, and hedge funds that don't trade on public stock exchanges. Unlike traditional investments like stocks and bonds, private assets are generally considered riskier, but offer the potential for higher returns. This distinction is crucial because it means that while these investments could boost your retirement savings, they come with a different set of risks that you need to be aware of. Bryan Corbett, the president and CEO of MFA, a trade group representing alternative asset management options such as private credit and hedge funds, expressed enthusiasm about the proposed order. In a Reuters report, he stated, expanding access to alternative investments in 401k retirement plans will give more Americans the diversification and investment options needed to build wealth and secure a prosperous retirement. During Trump's first term, the Labor Department hinted at allowing private equity in specific investment vehicles like target date funds, provided that companies thoroughly evaluated the risks and costs involved. However, the Biden administration took a different approach, stating in 2021 that it did not endorse or recommend such investments. In light of the potential changes under the Trump administration, some financial firms are already getting ready. For instance, Apollo Global Management and State Street have launched a target date fund that includes private market assets, while Blue Owl Capital recently announced plans to work with Voya on similar products for 401k investors. This development raises important questions. While diversifying your investment portfolio can be beneficial, do private market investments belong in a retirement account? And what impact might this shift have on the broader economy and individual saving strategies? Share your thoughts in the comments. Do you think opening up 401k to private markets is a smart move? Or could it lead to unforeseen risks? Venture capital's new target, your 401k retirement funds. Imagine waking up one day to find that your hard-earned retirement savings are being used to bail out venture capitalists. Sounds far-fetched? Think again. Today, we're diving deep into how your 401k might become the new lifeline for private equity firms. But here's where it gets controversial. This shift could have massive implications for your financial future. Let's break it down. First things first, let's talk about the big stories making waves today. The government's narrative on the Epstein files is shifting like sand in a storm, and it's raising more questions than answers. If you're curious about the twists and turns, check out the Lever's latest report. Now, let's switch gears to the financial world. There's a power struggle brewing between former President Trump and Federal Reserve head Jerome Powell. What's at stake? Your money. The fight for control over financial policies could reshape the economic landscape as we know it. But let's get back to the main event, your 401k. In just 3 minutes, you'll learn about some eye-opening developments. 1. The hidden wealth of homeowners insurers. Ever wondered where your insurance premiums go? Turns out they're lining the pockets of insurance executives. Performance-based pay packages have led to skyrocketing profits for home insurance companies. In 2024, these profits soared to a staggering $167 billion, a 330% increase from 2022. This windfall has translated into hefty pay raises for top executives, who collectively earned $310 million last year. Meanwhile, homeowners are footing the bill with a 24% increase in premiums since 2022, amounting to an extra $21 billion. 2. Elon Musk and the fight for clean air. In Tennessee, a battle is brewing to stop Elon Musk's projects from potentially harming the environment. The stakes are high, and the outcome could set a precedent for future green initiatives. 3. Trump's green energy grab. The Trump administration is eyeing control over one of the nation's greenest energy markets. This move could have far-reaching effects on renewable energy policies and the future of sustainable practices. 4. Your 401k, the new dumping ground for private equity. Here's the part most people miss. Private equity firms are looking for new ways to offload risky investments, and your 401k might just be their next target. This could mean that your retirement savings are used to fund high-risk ventures, potentially jeopardizing your financial security. So what does this all mean for you? It's clear that the financial landscape is changing rapidly, and your retirement savings could be caught in the crossfire. But here's the million-dollar question. Should private equity firms be allowed to use your 401k as a safety net? Or is it time for stricter regulations to protect your hard-earned money? We want to hear from you. Share your thoughts in the comments below. Do you think this is a fair use of retirement funds? Or is it a step too far? Let's spark a conversation and see where the debate takes us. Private lenders eye 401k market. Blue Owl, Blackstone, and KKR's big play. Imagine a future where your retirement savings could be invested in private assets, reshaping how Americans think about their financial futures. This isn't science fiction. It's becoming a tangible reality thanks to recent developments under the Trump administration. Last week, whispers of a bold initiative aimed at encouraging retirement funds to include private equity investments sent ripples through Wall Street. But here's what many people don't realize. The biggest players in private lending have been quietly preparing for this moment for years. Names like Blackstone Inc., KKR & Co., and Blue Owl Capital Inc. may not mean much to the average person saving for retirement, but these firms have become powerhouses in the world of direct lending. They've already established partnerships with managers of 401k plans, positioning themselves as key contributors to this potential shift. For instance, they've worked behind the scenes to ensure that the infrastructure exists to integrate private credit options into mainstream retirement portfolios seamlessly. But it doesn't stop there. Industry trade groups and high-profile executives have also been actively engaging policymakers in Washington, advocating for rules that would make it easier for everyday savers to access private assets through their 401ks. This push is part of a broader, long-term strategy to broaden the scope of private credit, making it more accessible than ever before. And while some see this as an exciting opportunity to diversify retirement accounts and potentially boost returns, others are raising eyebrows. Critics argue that private assets can carry higher risks compared to traditional investments, which might not align with the risk tolerance of the average retirement saver. And this is the part most people miss. The debate over whether private assets belong in retirement accounts isn't just technical, it's deeply personal. After all, we're talking about people's hard-earned savings, money meant to secure their golden years. So, should retirees take on the added complexity and risk of private equity for the chance of higher rewards? Or does simplicity and stability remain king when planning for the future? These are questions worth pondering. This proposal has sparked no shortage of controversy. Some experts believe that opening up 401ks to private investments democratizes wealth building opportunities by giving ordinary Americans access to asset classes once reserved for the ultra wealthy. Others worry it could expose inexperienced investors to unnecessary risk in any clay safeguards. What do you think? Is this move a step forward for innovation in retirement planning or a risky gamble? Share your thoughts in the comments below.